Well, we're partway through a Monday to kick off this brand new trade week, and we've got corn still on the lower side by about 2 to 3 pennies. We've got the front month here now, December, which is a new crop. It's down 3 1/4 at 348.5. March is down 3 at 360 3/4. May corn is down 3 1/4 as well. November soybeans down 4 1/4 at 826 1/4. That is off of the low of 821.5, though. January beans down 4 at 840 1/4, and July soybeans down 3 1/2 at 876 3/4. December Chicago wheat down 1 3/4 at 509 3/4. July wheat down 3 at 547 1/4. December Kansas City wheat down 1 3/4. July also down 1 3/4 at 550 3/4. December Minneapolis wheat up 2 at 574 1/4. And July Minneapolis wheat is up 3/4 at 604 3/4, with December cotton down 16 at 81.67. Just moments ago, the NOPA soybean crush report was released, and it's interesting. We came in at 158.885 million bushel here, and that compares to 167.730 the previous month. Now, even though that is a reduction, it's the highest August crush ever, and by quite a wide margin. Soybean oil stocks came in just a little bit lower this time around, 1.623 billion pounds compared to last week's 1.760 billion. But let's visit with Scott Gecas. He's at the edge of the trading floor in Chicago, and he visits with us now. He's with Longleaf Trading. Scott, what about these crush numbers? If you look at it compared to last year, highest crush in August ever. This should be pretty bullish for the market, correct?
Yeah, you would think, but it also goes into the account of just the huge supply concerns that we have going forward. You know, now we have this trade war talk going back and forth. Now they're saying it's going to be 10% versus that 25%, which, if you look at the chart, what was being proposed and what is actually being implemented, they're on two extreme sides. So we're going into a period where we have supply concerns in the soybean market in particular. Now we're going into a harvest where if they have a massive harvest with their crop, that's going to, have more concerns with supply concerns, and that's going to put a lot of pressure on it. We have record-ending stocks, just confirms the supply concerns. Traders are net short with increasing contracts. We have that 825 level that I've been talking about for quite some time. It's just going back and forth. If we break that 825 level and have a significant close, we're going to see a 7 handle.
Oh, that's kind of interesting. And with that, and you add on basis in some of these areas where basis is, anywhere from 25 to 50 cents under the board, that all of a sudden really makes a statement. What about the wheat market here? It showed a little bit of strength just a little bit ago.
Yeah, the wheat market in particular is the strongest of the grains due to all kinds of different things. So over the summer, we had the biggest drought in Europe and Russia. That was definitely affecting crop. Now we're running into a fact where they have the weather in Siberia is affecting crops. So now they have already have a frost and already a dusting of snow. So that's going to take an effect there as well. Not to mention that you have the rumors of Russian having export taxes back and forth. So one day they have it on, one day they have it off, so that's going to still remain quite a volatile market just due to those Russian rumors back and forth.
All right, Scott, hang on with us. We'll talk about livestock. That's coming up next. You stay with us right here on the Market Day Report. Well, the cattle market found a little bit of strength after getting off to the little bit of a weaker start here today. Let's look at the live cattle market first. Now we see here the front month of October down 38 at 113.42, so it lost some of its momentum that it had earlier. December down 15 at 117.90. February up 15 at 122.05. September feeder cattle down 20, but October up 24 at 159.12. This is a market also that was kind of mixed early on, but now all of these deferred contracts are on the higher side, albeit not by much. November feeder cattle up 23 at 158.65. January feeders up 32 at 155.22, and March feeder cattle up a dime at an even 153. Now the hog market, it's been weak ever since the get-go first thing this morning, with December hogs down 145 at 55.20, February down 109 at 64.58, and April hogs at 69.30. That is down 98. and still quite a ways away from the, in fact, just a little shy of $1 still away from the low of 68.38. Let's travel back to the edge of the trading floor in Chicago. Scott Gecas is here with us. All right, Scott, first of all, we've got a cattle on feed report that's coming out here on Friday. You know, this cattle market really showed quite a bit of strength here on Friday. Now we've got to get through this week, and it might become one of those deals where it's like tradition, where some of these cattle may not trade until after the report on Friday.
Yeah, that's what we expect as well. You know, the cattle complex right now, it's an odd dynamic. We're in a weird period of time. So fundamentally, we have short-term supply concerns. Hurricane Florence is definitely affecting those supply concerns. However, the U.S. doesn't really export too much beef, but they're expecting to export more beef, and that's the reason for the big run-up for the last few days, not to mention the big sell-off in the dollar. So that is helping support cattle prices as well as the protein complex across the board. The other factor is the African swine flu. It's definitely helping support across the board with the whole protein complex. It's not really affecting the hogs as much as everyone is expecting, but it's still there. That African swine flu, it's spreading. It is not contained. They found another case over the weekend in China. They found another case over the weekend in Belgium as well. So it's very clear it's not contained. It's spreading. So we're going to see how that's going to really affect these markets in the next few days.
What's your thoughts then, Scott, when you mentioned that you know, this swine fever, these swine issues are not affecting the hogs as much as what the trade would think? Is anybody explain why, or is it just still the looming tariff thing overhanging over the hogs?
Yeah, it's the looming tariff thing, but if you look at it, like I said, you know, a few weeks ago, or pretty much every day from last week, is when the Chinese swine flu is affecting 10% of their herd, that is equivalent to all of the U.S. or all of pork that was traded last year. So it's very clear that 10%, it's going to increase. So we're just waiting for the market to actually react to it.
Okay. Thank you very much, Scott. Scott Gecas is here with us, and we always appreciate visiting with you, Scott. We have